Hello everyone, it's me the Boss Hog bringing you another portfolio update. It's a bit late for the weekend, but honestly I had such a heavy Friday evening, went out with a few people from an investment Discord and absolutely didn't go to bed until about 8 o'clock in the morning. I'm now an old man, so I definitely felt it. Anyway, outside of that it was actually a pretty good week, but it's really because of a couple of big updates, so let's discuss that now. All right, so as you can see, overall performance was plus 290, give or take. However, there was quite a big difference between my Trading 212 update, which was still positive at 140. So broadly speaking, a pretty good week. If I'm honest, I'm not really sure where that difference comes from. Google was really struggling, and actually, I wanted to do a few other bits, but Google was stopping me from doing it. So anyway, as you'll see in a second, I keep a track of these things, and it's still pretty closely aligned. Honestly, as you can kind of see here from the first half of the week, I mean, it was shaping up to be quite a poor week. I suspect that many people out there would have had a red week. So the fact I managed to have a green week is probably a bit surprising. But again, as we'll see in a second, and you might have seen from the thumbnail, it was definitely due to a couple of big updates. But yeah, overall, of course, I'm happy with a green week, especially compared to the wider situation in the stock markets. No new capital added. However, both me and my wife are getting paid next week. Also for my wife, it's bonus month, so that's awesome. And she's a superstar, so she's going to get quite a material bonus. So that'll be excellent. I can't wait to start buying shares again. No dividends this week. However, I am due to be starting again soon. So yeah, I mean, actually, I'm due one from the 14th, but it hasn't quite arrived with me yet. And actually, I'm due sort of just about £140 for December, I'm expecting. So yeah, quite a little while to go here, considering I've only had a handful at the beginning of it. I don't think I've shown this for quite some time. This is my sector percentage. Broadly speaking, it's taken from available segmentation. In one or two ways, I might tweak it, but that's especially for things like utilities, where one of them might be infrastructure, and I might feel like it's oil and gas or something along those lines. But honestly, broadly speaking, these are standard. Other differences, by the way, might be, for example, like some people might count Amazon as a technology company, which is what I do. Other people might count it as a consumer discretionary. You've got similarities with things like Disney, which I would class as consumer discretionary, and etc. So, like I say, I think a lot of my segmentations won't be a surprise to anybody. You'll see that my pie is quite unusual, I would say. So first of all, I have quite a heavy technology bias. Even within that, I have not a ton of big tech. I have quite a lot of kind of mid-sized tech and speculative tech. So definitely in terms of my technology, I'm thinking about the long term. I do also quite like consumer discretionary at the moment. Now that slice has definitely benefited this week because both of my good performing shares are in that segment. And then my ETF chunk here is gradually building up over time. And to be honest with you, I expect it to build up further over time. You'll also see some big gaps in here, like healthcare, for example, is non-existent. I would like to be buying into healthcare again. I have owned it in the past, particularly Bristol Myers, but I just decided it wasn't, that there wasn't as much opportunity there as there are in other areas. But again, I think it's important to get back into that in the long term because I think it's a good hedge in many ways. So this is my segmentation as it stands, and you can see there it's a little bit atypical, should we say. And then last but not least, so this is now 5 weeks running. Maybe when I've got like 12 weeks running or something, I'll show you the difference. But just for anybody who's new, you'll see there the table middle right. That's my exact portfolio value as it appears on Trading 212. And then I use Google Documents to basically bring my free accounts together so I don't have to worry about it. And sometimes there can be differences because of like currency or buy sell spreads, or just one of them doesn't update basically. So over time I monitor it just to make sure it stays aligned. But sometimes week on week can be quite big differences, especially if like one thing doesn't update. That can be quite annoying, especially if it's like a bigger holding or something like that. So like I said, at the moment it's £52 on a portfolio value of 110k is obviously trivial in my opinion. So that's the summary anyway. Obviously it's great that it's green. Oh, and also this week I did actually do some buying and selling, but because of some issues with Google Documents this week, when I tried to load it up, it basically was erroring. I don't think that is me. I think it's Google. I've tried to refresh it and it just keeps spazzing. So next week I will bring you that, but basically I had to sell out of one of my positions because of IRS tax changes. And again, I'll talk a bit more about that next week and what I've been doing with what was about 0.6% of my portfolio. In the meantime, however, we'll look at my portfolio changes over time. All right, so because I've now started to have sort of about a quarter of my portfolio that I choose to talk about in a bit more detail, as we'll get onto in just a second, this part of this weekly update, I'm going to kind of change the look of it a little bit and basically do changes over time. So Previously, I was just doing like a week-on-week change, and that of course gives some value, but I thought it might be quite interesting to look at it over longer periods. What happens is once a week, I basically save an output of my portfolio at that moment in time from Google Documents, and then I can use that to basically look back. Now, I haven't been doing this for that long, about 3 months, but I'm starting to get the data where I can do like 1, 4, and 12 weeks. Eventually, I'd like to potentially do like 1 week, maybe 3 months and 12 months, just to see how it really changes over time. But I don't have the breakdown by companies to that kind of detail. Again, this is just my own spreadsheet. It's nothing fancy. However, what I have done is done 1 and 4 weeks, and probably from next week I'll do 12 weeks as well. And you can really see here, I mean, there's still so much red, even both across the 1 week and the 4 weeks. I'm again imagining many people's portfolio doesn't look too dissimilar to this. It may look slightly better, it may look slightly worse, but it's obviously pretty rough in most parts of the market at the moment. Also, just as a reminder, these percentage changes across both time periods, they'll include currency movements. So again, if you go to look at sort of Microsoft on Google, it may or may not align, but any difference will basically be currency movements as well. So it will be factored in as part of this. So this is my basically, it's very personal to me, and effectively when I bought it. The pound should actually be the same, because that's really the only reason why it wouldn't match. So there you go. And yeah, we'll get onto the reason why both Games Workshop and Hollywood Bowl had such good weeks. I think their response from both was notable. Both basically up, high teens in a day on big news. Gamma was up a little bit, but to be honest with you, all of the other blacks here were pretty modest in the scheme of things. And then there's a few reds here. I mean, Genius right at the bottom there, it does ping around quite a lot, but it has definitely had a bit of a pullback. I would say it kind of got slightly ahead of itself before its results. It was at like 560, I think. But then it also got like, it had a bit of a fallback, and I was like, okay, it's consolidating. Now, to be honest with you, if I could buy it, I'd definitely be tempted to buy it again. I think it's basically an increasingly proven business. So I'm not stressing really about this fall. But when you're dealing with effectively speculative and SPACs, as this once was, I'm kind of relatively used to these kind of swings. It feels great when it's going up. It does feel bad when it's going down, I'm not going to lie. But we just ride the variance at this stage. Amcor also had like really fantastic results just outside of this reporting window. I suspect actually Amcor will be interesting when I do 12 weeks, because you'll see it's actually probably still quite far up on 12 weeks, probably up about 40 to 50% still because of those earnings. It's had a bit of a consolidation. I'm not hugely surprised, but I still think Amcor is a great hold. T-Row is all over the place. Anyone else here I want to call out? Not really. It's broadly speaking, as you'd expect, the market performing at the moment. But there is some big updates on the companies I want to be focusing on, so let's do that now. All right, so again, I will play around with the format here a little bit, probably from next week or the week after, but for now, you'll just have to deal with me having a very basic table here to talk through. This week, however, I have organized it in what I think is order of importance. You may or may not disagree, but it's my video, so it is my arbitrary decision making. However, I think the first two are, and actually arguably the first four, are probably quite clear call-outs, but we'll start with the biggest, which is Games Workshop. This went up about 18% at one point. I think it settled about 16% up on news of a tie-up between Games Workshop and Amazon. Obviously, this is a no-brainer in terms of big responses. Games Workshop is increasingly moving to a hopeful capital-light model. It's always had very high efficiencies, very low kind of capital-intensive business, which is great. However, as it's scaled, it has run into some logistics and scaling problems with everything from kind of molding machines to paint production to freight to warehouses, etc. So it definitely has had some of those problems, as it's kind of needed to invest in it. It kind of needed to build up that footprint. However, it still has some of the best efficiency measures you've seen ever. And by that, I really do mean it. Like, compare it to a lot of the big tech and it comes out more favorable, despite a reasonably challenging last couple of years. But the real reason why Games Workshop is like a hopeful stock in many ways is because, there is a hope that they'll move to increasingly from core earnings, which is basically selling miniatures and codexes, and which is basically rule books and things like that, to basically licensing their IP. So Games Workshop for a long time were very guarded on their IP. I mean, almost like legendarily so, right, to the point that they were suing their own fans and content creators. It was crazy, and I would say Games Workshop did create a lot of bad will during that time. They've definitely lightened up a little bit, but only a little bit. They're still considered quite litigious as an organization, but they have, very heavily started to really embrace this. And actually, since I've been investing, I've really noticed like their sort of updates, both quarterly and then their kind of 6 monthly and yearly ones, they've really changed their tone in kind of how they approach this. So yeah, they kind of went from a point where it was like, although IP is important to us, we consider our core business as central to everything we do, right? That was how it started 18 to 24 months ago. You can like go back and read their company house updates. Since then, it's really kind of been gradually changing where like now IP is a huge growth opportunity, right? So, I mean, I think like they've been going through the same journey that we have as kind of fans and investors in particular. But this is really the moment where I think it all came together. Now, to be fair, there is some skepticism because Games Workshop launched Warhammer Plus to, I would say, broad derision. It was a little bit unfortunate because it came out at a similar time as Arcane from Riot Games, right? Admittedly a different beast, but the production values, the kind of mature content was just embarrassingly lacking compared to another game studio. And a lot of people, myself included, think the Games Workshop just has some of the most incredible IP and just some of the most expansive universe. So there's definitely some concern around like, are Games Workshop actually going to butcher this opportunity? There's also some concern about Amazon specifically, right? Like a lot of fans weren't really impressed with the Ring of Power and other work that's kind of been taken. But I think importantly for me, and again, I don't think I'm alone here with both investors and especially fans, is that Henry Cavill was confirmed to be not just taking a starring role, but also involved in the production as well. I think not only is Henry Cavill an incredibly likable, handsome man who, men respect and women probably dream about, probably some men as well. But, like he is an absolute Warhammer nut. He has his own army, he paints, he assembles, he is a willing advocate and just everything that you want in terms of like blowing away that dusty image. And I think the fact that like Henry Cavill ended up leaving The Witcher because that production moved too far away from the source material, I think we'll have a lot of people hoping that with Henry at the wheel that it will kind of keep it very true. So I know Lutin09, who many people consider an authority figure on YouTube. I definitely do myself. Like he took a very similar viewpoint to me in this regard. And it's exciting, right? And I think it'll be very interesting to see what direction they choose to take because there's a lot of options for them to consider. I think the Games Workshop was significantly undervalued before. I actually think despite this run-up, it's still significantly undervalued. It's worth saying that I don't know the commercial details of this arrangement yet. I'm expecting it to favour Amazon, not just because of the asymmetry and size of company, but also because they're basically bankrolling the project. So one of the few details that has emerged is that they will control the merchandising rights of this production. It'll be interesting to see how that meets Games Workshop's famously strong ownership of IP. I suspect it means that they'll stay away from certain in-law stories at the moment and move to something which is not currently covered particularly extensively by Games Workshop, just to keep that quite clear. But it will be interesting to see what those small details look like as and when they're available. But big news, very exciting, and as a fan, I'm actually genuinely excited, and obviously as an investor, I'm delighted. My Games Workshop position is now green for the first time in at least a year, so that feels really good. Games Workshop, I've done videos dedicated to Games Workshop beforehand. Now, I accept that before these results, I was on probably the top 10% in terms of bullishness. I was clearly ahead of median expectations. So imagine my surprise when Games Workshop formally published their numbers and they actually beat my own expectations. Beat my own expectations by about 7%. I thought they were fantastic, basically. Profit up 77%. Now, there is a little bit of overlap there with some of the COVID overlap, but what was really impressive to me is that revenue was only up 48%. Both of those figures, like I say, beat expectations comfortably. My profit guidance was 37 million is what I was expecting. Most people were in the sort of 33 kind of range. So yeah, really positive. A couple of highlights to mention is that their energy is fully hedged until October 24. 30% of their sites are fully solar powered, and they expect to get that basically to 100% as their hedging runs out. Interestingly, they took the decision to lower food prices. Now, revenue for food prices still went up 20%. I thought it was an interesting decision. I sort of, I'm fairly agnostic on it in isolation. I can see some pros and cons. But for them, they wanted to keep the costs of sort of a family trip as low as possible. And basically with food, drink, and a game of bowling, it's something like 35 to 40 quid. They feel like that's a good entry point, and ultimately, as long as that number still feeds through into good revenue and earnings, I'm very happy to back them effectively. So I decided to revisit my analysis and basically tweak it slightly. So I'd previously given them a 311 target. I decided that following the update it was worth 322. So that is my new target. That's 36% higher than current. But for anyone who watched last week's, Berenberg had a recent price update with 350. Interestingly, my price projection is probably in the midpoint of analyst expectations at the moment, so I'm slightly less confident moving forward. I think Hollywood Bowl still is a very small business, right? It's 400 million market cap, still has some things to prove. So maybe I've given it a 13x multiple, but I mean I think this is like its current earnings, to be clear. So I think it definitely has huge potential, and like I said, I'm very happy to have a mid-sized position in Hollywood Bowl. I do want to talk about Fevertree, because this is a company, again, I've done videos on before, and I've become gradually more bearish, unfortunately. But something I've been saying for months is, I really wish they'd appoint an industry heavyweight to, a really key role. And, I mean, they must have listened to me, right? But they did exactly that. I was really pleased. I sort of mentioned maybe they should get them from somebody like Pernod or Diageo. Instead, they went for SAB Miller, obviously an absolute industry titan as well. Now, this guy was already serving as a non-exec, but basically they made him the chair of non-execs, which, a quick Google tells me that job description involves basically advising the CEO, as well as a few other things around managing the board and stuff. And again, I think the CEO and the creators of Fevertree have kind of grown with the business, but it also feels like it's got a little bit away from them a bit. And whereas Games Workshop have been able to kind of mitigate a lot of the challenges of scaling, I think Fevertree haven't done it so well. Fevertree have had a few additional problems, Fevertree don't control a lot of their production, whereas Games Workshop control it all. And also they had, as well as having freight issues, they had glass issues as well, which was a big problem for Fevertree in terms of glass inflation. But I'm really pleased with this appointment. I think it's exactly what they need. And I think it sort of professionalizes everything. It's great, the guy's former CFO of this big company. Again, to me, the problem is really cost discipline. Their strategy is correct, their execution has been lacking for at least a year. So I was very excited by this news, and I'm hoping it's going to kind of improve the performance of the board at Fevertree. Speaking of Gamma, a new CEO confirmed. Previously, he was CFO at Gamma. Now, he's been a CFO at Gamma for 8 years. I actually know of him. The previous CEO retired. I actually do know the CEO of Gamma, and he retired for personal reasons, which I won't speculate on here because, I have been told the reason, but I don't think it's appropriate to talk. But he retired for personal reasons, completely unrelated to Gamma. For me, I view this appointment as very much business as usual. And to be honest, I'm a big fan of Gamma. They're basically one of my 3 largest positions. I don't think Gamma needs to do anything different. I think it's a solid appointment, and I'm very happy with it, basically. Genius Sports, there's a couple of bond issues coming up. So we'll start with this one first of all. But basically, it wants to convert warrants into shares at a slightly reduced rate, but do it immediately. Genius basically explained that this is to give them a bit more flexibility. And ultimately, it should be good in the long run because it should lead to lower dilution of those warrants into shares. So basically, diluting me less. So overall, I was like, okay. Again, it may be one of the reasons why why Genius reacted quite badly in terms of share price, but honestly, I'm not really convinced. It's still quite volatile, so it's difficult to really confirm that. Everaz here, so they did have news that one of their mines had collapsed, but actually, I'm not really sure collapsed is the right word. It's certainly part collapsed. There were 4 injuries reported, one of them apparently quite serious. Everaz do publish deaths and injuries, like I think a lot of the miners do, so obviously we hope this person recovers. But it's, first of all, I think it's important that we hope that this person recovers. Secondly, we hope that the mine itself gets back up and running as soon as possible, to be cold and blunt, but, I can't really avoid saying that. Polymetal also is in an interesting position here. So it basically began buying back 8% of its shares. These were first exchangeable shares, and that basically gives them the right to sort of convert from basically a bond into shares. They started buying them back, but the 8% here was like the provision that they'd taken. So they've started to basically give people the option of sort of either getting the money or leaving with the bond. So that again is progressing. Yeah, it worked out about 8%. A quick little bit of maths that I did there. Huntsman, no real update from Huntsman themselves, but a couple of industry articles that suggest basically it was well positioned, both in terms of resins and also detergents, which I'm not going to lie, I'm not a chemist. I had to look up what exactly detergents meant, but it's effectively like a hydrocarbon ingredient, and apparently it's a real growth area. So, okay, fine. But evidently Huntsman's quite strong in these areas. Resins I actually knew about, but detergents was quite a new one for me. So, okay, I'll try and get more familiar as we learn about these companies. So I'm just going to have some water. Next up, we've got medical properties. I thought this was interesting. It kind of saved me doing the job, but Market Beat aggregated a bunch of analyst targets for the next 12 months and put them at $17.27 dollars per share, by the way. Now, again, I think that's on the low side. What I have noticed within analysts is that a lot of them are kind of starting to come together. There was quite a lot of spread, anywhere between about 12 and 24. And they seem to have kind of started to come together between about 15 and 19. So I've definitely seen that range shrink. Again, my number is still 20 to 21, really, for reasons I spoke about before. But, you know, again, I just think it's a niche where the bear position is overdone. So that's basically as simplified as I can make that. I will do a big update when they do their next earnings. There was actually two Seeking Alpha articles that I would view as both very similar to each other. They were both balanced. Both of them recommended a buy for similar-ish reasons, basically, that it was kind of undervalued and or represented a dividend yield opportunity, basically. Both of them likewise argued that there was about a 50% upside. So, yeah, a lot of kind of bullishness from that regard, I would say. On balance, they were more bullish than not, put it that way. Amcor was interesting. So the CFO sold 6K, a lady called Megan Faust. Now, she has been selling quite a lot recently. So she actually sold 42,000 shares over the last 3 months or so. It's not exactly ideal. I have been keeping an eye on it because previously one of the sales directors at Amcor also sold a fair chunk of his shares. Now, it may well be that a lot of options are starting to mature, but I will definitely keep an eye on that, and we hope it's not a trend. Like I say, Amcor did also have a big run up following the results, so maybe there was an opportunity there to sort of cash in on any positions as well. May have been a similar way of thinking. Huntington here, again, no news on the bank itself, but I thought this was worth highlighting and kind of praising, actually, that the collaboration was announced with a company called Magnus Mode, never heard of before, but basically it was to look at improving banking for autistic people and neurodiverse, which apparently is a term. Again, I think that's great. I'm sort of all for that kind of stuff, making sure that people can bank properly, including autistic people, so that was cool. Also, as well, following some what I would say were pleasing good results a fair few weeks ago now, but there was quite a significant fall in short positions this week, so basically 19% week on week. It's not exactly a hugely shorted stock anyway, about 3%, but I thought that kind of movement was quite significant, and to the point that, you know, like I found an article just discussing it, so I felt like I should share that as well. No news on Kainos, no news on Phoenix, and yeah, Vodafone. I did expect to have Vodafone done this week. My plan was basically to do it Friday evening or Saturday, but I mean, honestly, guys, I was absolutely done for on Saturday. I went to like this techno EDM dance club and absolutely lost myself for a fair few hours. So when I got back in the morning, I was just in no position and then slept for many hours. Yeah, Saturday was a bit of a write-off. What can I say? In my mid-30s, I just can't party like I used to. So I've actually done quite a lot of work on the Vodafone position already. Very much expected to have it this week. I will absolutely not be getting wrecked next week because it will be Christmassy sort of time, but I do still expect to have a video, you know, sort of Friday-ish kind of time next week. Anyway, that's all I have to say for now. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.